Our objective is to achieve equity-like levels of returns, but with considerably lower volatility than the equity markets. The main way that we achieve that is by building a very well-diversified portfolio, but we can also use derivatives in order to help us achieve that. We don't buy protection within the global absolute return strategies portfolio. What we do is we only select ideas that we expect to generate a positive return on our 2 to 3 year view. There's obviously a very high threshold for any position within the portfolio that might be long volatility for the same reason.
In 2005, the trustees of the Standard Life Group staff pension scheme faced a problem that was common to many pension funds at the time. Several years of volatile markets had taken their toll, and the fund was running an accounting deficit of around 20%. Up until then, the fund had taken a traditional approach, making a large allocation to equities and smaller allocations to bonds, private equity and real estate. Over the longer term, such an approach can yield successful results, but over shorter periods, it can lead to painful losses. For example, in the second half of 2008, the correlation between equities and real estate and equities and corporate bonds increased very significantly as global growth expectations plummeted. Diversification benefits were lost, and these key asset classes fell sharply at the same time. Standard Life Investments work closely with the pension fund trustees to develop a more suitable approach for the pension fund. The solution would look to generate returns relative to liabilities rather than relative to an arbitrary benchmark. And at the same time, it would look to take significantly less investment risk than the old approach that had been so dependent on equities. A multi-strategy approach was adopted, making use of both traditional and more advanced techniques. It was called Global Absolute Return Strategies. Its aim was and continues to be to generate investment returns with significantly less risk than traditional approaches.
My role in the team is to be an idea generator. My particular expertise is around the fixed income markets, and particularly with regard to credit. Credit is just one of the existing asset classes in the fund, and at times it has played a material role, but it's never dominated the overall risks of the portfolio.
Put simply, the investment process is to find really good investment ideas in terms of macro scalable ideas, have a lot of information about risk management and risk measurement, and understand how those ideas fit together, and then construct the portfolio as carefully as we can using modern portfolio techniques so that we minimize transactions costs, minimize market impact, and maximize the investment return and the liquidity for the investors. The multi-asset investing team structure is designed to mirror the investment process we use for designing the GARS portfolios. We have a research and strategy department that looks for investment views that become investment strategies that we eventually turn into positions in the portfolio. We have also an on-desk risk management department that sits with the portfolio managers, helping us and giving us information about the amount of risk we're taking in each of the investment ideas and how those ideas fit together into the overall portfolio. And then we have the portfolio management department. Those managers who construct the portfolio decide which investment vehicles we'll be using, which instruments we'll be using, and how we fit them together into an overall portfolio. Strategy, risk and structuring, and portfolio management mirroring the investment process for our GARS portfolio. The wider investment team plays a really big role within the GARS portfolio. In the end, what we're doing is taking investment views from the almost 200 investment professionals that sit on the floor here at 1 George Street, bringing those investment views together to try to refine out strategies that we can use for the GARS portfolio. So we have regular interaction with our equity, bond, rates, credit, FX, and cash team so that we can bring those views together along with our macroeconomic environment and create the strategies that we put into the GARS portfolio.